Ladies and gentlemen, welcome to the second ever Independent Speculator live Q&A session, also known as the 3 yellow metals. I do have some remarks I want to make about that, but my main point of doing this is to be here with you and enable you to ask me questions, interact with me, and be as helpful as I can. All right, so before I get into the 3 yellow metals, I do want to talk about bullshit. I have to do this because it affects everything I'm going to say, how I'm going to say it, why I'm going to say it. And by this, I don't, of course, mean the vulgar vernacular term. I mean the most excellent definition offered up by Neil Stephenson in his wonderful book, Anthem, which has to do with, bullshit, with speech designed to confuse, designed to impress, make it feel like you've said something powerful and important when you really haven't said anything at all. Very often used to describe features in products, dynamic zoom, so on. And I want to avoid bullshit. This doesn't mean I have no rhetorical purpose. Of course, I'm here for a reason. Hopefully I'd like to persuade many of you how useful I can be and why you should subscribe. This is the honest truth. But I'm going to try to do it as honestly as I can. I'm going to try to employ as little bullshit as I can. And I want to remind you that by any other name, it's going to smell just as bad. So don't lament the bullshit. Let me give you an example. We can get into the 3 yellow metals, and let me give you an example of what I mean and why I think this is so important. It may seem obvious, but I think this is important. Gold is the yellow metal. The other 2 that we're talking about today, uranium and vanadium, aren't really yellow, but their oxides look yellow. And so uranium is often called the other yellow metal. And if you look at the information on uranium, it's such a relatively thin, oddball market that it's prone to extremes one way or the other. And it's very hard to get good information on it. Most analysts rely on the same sources like UXC or the World Nuclear Association, which may or may not have their own agendas as they present data. If you look at the various reports, I've seen a report from TD that's saying that the estimated 2018 supply shortfall was on the order of 7 million pounds. They're projecting minus 5 million pounds for this year, minus 4 million pounds for next year, and then back into surplus again. Scotiabank has a report actually saying there was a surplus in 2018, 3 million pounds, but they are projecting a deficit of 0.3 for this year, back up to positive 0.2 next year, and so on and so forth. I've seen all these different brokerage reports and very weighty materials on this subject. You've probably seen them too. And so this is where the bullshit comes in. These numbers can't all be right. We don't all go and telephone up every utility in the world and ask them how much uranium they're planning to buy. And if we did, we wouldn't get answers in most cases, and certainly not straight answers. So what do these numbers mean? Is TD's number better than Scotia's number? I don't think so. And they all rest on a number of assumptions applied to roughly the same source data. So if you're here tuning in today expecting me to say, this is the number, this is how much uranium is going to be missing from the market this year, with caveats, I'm going to disappoint you. I'm not going to say that because, frankly, it would be bullshit. It would be trying to give you the impression that I have, all this math that proves my view, and therefore you should do what I say. But in fact, it's just a guess. And a guess dressed up in a lot of math and a lot of numbers is still just a guess. And if I wore robes and a scholarly hat, or something, it wouldn't change anything. Neither would how thick my report was and how full of numbers it was. It's still a guess. Nobody really knows. So in that context, I'm very happy just to get the direction right. And fortunately, that's enough. If we get the direction right and we bet on the kinds of equities that can give us leverage to movement in the underlying commodities like uranium, we can do very, very well. And in fact, the fact that the uranium market is so opaque and it's so hard to get good data is part of what makes it prone to such wild swings. That's why the price of uranium can go from $7 to $140 in decades past, or recently pre-Fukushima, was on his way to doubling in the space of just a year or two pre-Fukushima. So The bad news is that it's really hard to get good, hard data and to be able to do really reliable, non-bullshit math on the data. The good news is that very same thing makes for wild swings in the market that we can benefit from. So that all having been said, I do think that we don't just therefore ignore the data, forget any data. Let's just, guess. I don't mean guessing in absence. There is data out there, and you try to tune out, well, how much of this data is bullshit? How much of it is real? Who's saying it? What is their agenda? How much weight do I place in this data? And that's where experience comes into play. So I'm having given you that caution about bullshit. Here's some of the numbers that I think are more reliable. The World Nuclear Association is projecting, with their caveats, an increase from just over 400 online reactors to over 500 online reactors by 2035. That's more than a 20% increase, depending on how you use the numbers, how you look at the numbers. But note that's by 2035. And these numbers are used by a lot of different analysts to publish a lot of different reports. And 2035 is a long time. We can't even accurately guess the price tomorrow, let alone next year, let alone really know what's going to happen in 2035. And I can tell you another Fukushima-like event could completely reverse the trend. That having been said, the trend is for more nuclear power. That's the bottom line here. I'm glad to get the direction right, as I said. And the direction for this is that demand is increasing. And with that, if that's a fact, if I'm right about that, if demand is in fact increasing, the fact that uranium can't be mined profitably on average around the world at current prices or anywhere near current prices is seminal. That's in many ways all we really need to know. Now, will it be 500 plants by 2035? I don't know, and neither does anybody else. We're looking at, according to plans and suppositions and announcements and so on, maybe another 224 plants coming online in that time period, they're saying, and 140 removed. It's important to understand that we're not just looking at the good side here, just all the wonderful new plants that are going to be built. They're trying to look at the negative too, and the plants that are coming offline. So despite those negatives, despite the rollbacks and the repeals and the announced cancellations and so on, they are still looking at a substantial increase in demand in the coming years. Okay, I've just said that 2035 is a long time from now. How reliable is that? I don't know. What we do know is that China has built 26 new plants, brought them online in the last 5 years. That's huge. That's more than a double of their fleet since 2014. These are, real numbers that we can look at as facts from the past, as opposed to models, projections, theories about the future. And that tells us something about the strength of the underlying trend that we're looking at. So that's what I put together in my mind. This is the way my mind works. It's not that I'm unwilling to use math. It's not that I'm willing to make projections. And I work with some very smart people who help me out with that. I'm not claiming to be a mathophobe, but I know my limitations, and I'd much rather employ some very smart people to help me build models and get them right. But I don't even go there unless the fundamentals are right. I'm a fundamentalist, and the fundamentals here are for increasing demand in the near term and possibly foreseeable future for uranium at a time when the supply side is constrained and ultimately in trouble. Now, we did have a uranium glut, and we did have oversupply, and we did have secondary supply swamping the market. And how much has that changed? This is really the million-dollar question right now. And again, the real answers are not forthcoming. There is no hard data on this. So what we can look is the price action, and that is hard data. That is known. And what we can see is that the rise in 2018, the rise that we've seen since the January 2018 bottom, is different from previous spikes. It's broader, longer, higher. And to my mind, that does tell us that there is a reality in the marketplace that is different now. And that's not a great surprise. The big suppliers in Kazakhstan and Canada have cut back on production, and it looks like the secondary supply is, the reason for that secondary supply, particularly from Japan, is going away, and that Japan is restarting so many of its reactors. So the fundamentals are very positive here. The recent history is very positive here. The forecasts are very positive here. Now, is that a guarantee? No, of course, it's no sure thing. But that's how my mind works. That's what I'm looking at. That's why I've been willing to back the current trend, which has done quite well. I was right about uranium in 2018. I'm very bullish on uranium in 2019. And I do expect to be right. And I'm putting my money where my mouth is on that. If you've been reading my weekly sendings or looking at the posts that I make on the free side of the website, you know how much I believe in putting my money where my mouth is and how much I look for that in the investments I make. So trying to walk the talk here. Okay, that's the first yellow metal. The second one is the one I got wrong in 2018. Well, maybe got wrong. I got right and I got wrong. I'm talking about vanadium, not just because it rhymes, but because it was such a headline grabber, and so many people are fascinated by this, oddball metal that few people had really paid any attention to before. And again, when you have these small, not very transparent markets, it's hard to get into real math here and make any projections without becoming a source of bullshit. So I'm looking at the big picture. I'm looking at the fundamentals and sticking to that. Looking at the big picture, what data do I have? Really only the backward-looking price information. And fortunately, that's out there. I'll tip my hat to the guys at Prophecy. They are an issuer. I do not own the shares, but they have a great public service posting your vanadium prices for anybody to see at vanadiumprice.com. And to their credit, they didn't pull the plug on this thing when prices started crashing last year. So kudos to them for reporting the prices, whether they like them or not. Congratulations on that. So fundamentals here are the new rebar standard in China. That was real. It did change the market. A 30% increase in vanadium required in strengthening rebar in China. That was material. It mattered. But a 30% increase in one use, in my mind, did not justify a 5-fold increase in prices. So when I saw this, I saw the market going ahead, and I didn't jump on the vanadium bandwagon, even though I was pretty early in identifying this trend. That was a mistake, I guess a short-term mistake. I could have made a lot of money jumping on the vanadium plays a year ago. They would have done well by summer, and I most certainly would have taken profits on my first double. So I could have made money and then gone risk-free, and then I would have exited the trade when vanadium prices did turn south again. But I was concerned that the rise was too much, too quick. In the end, I was right. The prices did turn south again. So I was right about that, but I missed an opportunity, and I'll own up to that. Now, where do we go from here? That's really what we want to know. Never mind the past. What do we do now? I am longer term bullish on vanadium. I do think the change in standards in China is a one-way change, and it's material. And I do think the battery story has some use and validity to it going story. That is, these big vanadium flow batteries are a great solution for storing energy for a whole city or a factory or something on that large scale. Now, this hasn't really happened in a big way yet. There have been basically a couple of pilot large scale, so maybe pilot's not the right word, test projects. So this is happening, but it's not like this big wave that's taking the world by storm right now. So I'm cautious about that. And it is also true that there are other large scale technologies besides vanadium flow batteries that could do this. And what vanadium has going for it is that it's not a new idea. This has been done since the 1960s. It's off the shelf. It's already been tested on the large scale. So actually, I am pretty bullish on vanadium going forward for these reasons. But I still think that the current price might be too high. And again, all I have to go on is past price action. We've seen spikes before. What may look right now like a broad shoulder on the right-hand side of the vanadium charts, that could be the shoulder before a fall down. We don't know that the price is stabilized. It started to come back up again after it retreated so sharply from the peak. But it is headed down again right now, and we don't know where the bottom is on that. I've said before that I think $10 is a good price, and not wanting to be a purveyor of bullshit, I'll say that's just a guess. That's just me looking at past price action, if past is guide, that would seem like a reasonable guess going forward. But that's it. There's no more in-depth math there. And I think that if I did have, my bright lads help me out with a very detailed model, there would be so many assumptions in it that it would be no better than my gut guess. So I'm leaving it at that. Where do we go from here? What do we do? Me, I'm watching it. I want to see a more stable price. I'm perfectly happy to get a vanadium tailwind on uranium plays that I do like, which have a uranium tailwind. Vanadium tailwind. I'm perfectly happy to cash in on that. But I'm not betting on vanadium primary plays until I feel confident that we have a real sustainable bottom in there. So, and I don't see that happening anytime soon. I think it'll take several quarters, maybe a year for me to feel that confident that we have a stable price. The third yellow metal, boy, I've put gold, the only real yellow metal, third here. Maybe I'm saving the best for last. So in the interests of again, not being a purveyor of bullshit, I have no price target for gold. I'm not saying gold finishes the year at 1,400, 1,500, 1,700, any of these numbers that I've seen out there. These are all guesses. I've heard people say, I stand by my $1,700 projection. What does that mean? Does the person who makes that claim promise to shut down their newsletter if gold doesn't go to 1,700 by the end of the year? No, of course not. I refuse to join that game. I'm happy to get the direction right. And I am optimistic. And I do think, my sense is, my fundamentalist sense is that this should be the break. Oh, there I go. I'm trying to bullshit. Sorry. I think this is the year that gold breaks out of its range. I could be wrong. I do think that. Why do I think that? I think that we see, what's the data here? What's the input here besides these bullshit models? I think the most important data that I've seen watching gold action over recent quarters, and I think recent history is the most important history here, is that we've seen gold doing its job again. We've seen gold going up on days when the fear sphincters open up and all that adrenaline hits the market and you see the Dow drop 1,000 points in a day and so on. We've seen gold go up as it should on such days, and significantly even if the dollar is going up at the same time. That's really important, because when that's not happening and gold is trading like any other commodity, it trades inversely to the dollar. It's a money-like commodity. It's the real money if you're like me, honorary gold bug. And it makes sense for gold to trade inversely to the dollar when it's seen as a commodity, even that type of commodity. But when fear hits the markets and people are looking for a safe haven asset and gold doesn't go up, that's a problem. That's a problem for sort of the fundamental gold story. And we saw times in recent years when that would happen, when gold was not doing its job. That was a legitimate concern. But in recent quarters, we've seen gold doing its job. We've seen fear driving gold, even when it drove people into the dollar at the same time. And I think that tells us, what that tells us, it's data on the market. It tells us that people are aware of gold as a safe haven. I personally believe that most of the people in the market today remember very well the lessons of 2008. Everybody is afraid of the next 2008. And everybody remembers how well gold and gold stocks did in the wake of 2008, and even ending that year, 2008, in the positive. On the flip side, I'm not a doom and gloom forecaster. I love my friend Doug Casey, and I think he's going to be right at some point about the Greater Depression. But I'm not here to tell you that the Greater Depression is knocking on our door this year. Maybe it is, maybe it isn't. I don't know, and I don't think anybody, even Doug, knows. So there is the other scenario where it's not fear in the driver's seat this year, it's greed. And if it is greed, I actually think, again, that that's very bullish for gold. If the global economy rights itself, if the trade war ends, if China rights its woes, which are greater than the trade war, that unleashes a great deal of buying from the biggest gold buyers in the world. And I do think that the everything's hunky-dory story, if that's what we get this year, is bullish for all commodities, and that gold will go back to trading not as a safe haven asset, but as a commodity, and that story is bullish for all commodities, including gold. So I see gold and silver, of course, as the win-win play for this year. And yes, if you're a gold bull, I think you should be a raging silver bull. We've seen this repeatedly. I tweeted a link that my friend Jeff Clark sent me where he mapped this. He mapped previous gold rallies. And he showed that, I think, in 5 out of 6 of them, gold led, and then silver caught up with gusto, and outperformed gold by the end of that rally. And history doesn't always repeat, but it sure does rhyme. And rather than just guess out of the blue, basing my guesses on what I've seen in the past, I think is a reasonable way to go. Okay, so those are the opening remarks I had on the 3 yellow metals. There are certainly plenty of others to talk about, other things to get into. But the most important part of all that I hope you take away is my MO, my method of doing things, my outlook, if you will. If you don't see a price forecast from me on a stock that I write about or a metal that I follow, it's not because I couldn't come up with one, it's because I think it's bullshit. I wrote an article called Beware of the Thud Factor or something like that some time ago. I think it was one of the first articles I wrote because I wanted to lay this out there. I wanted people to understand how I do business here. I've got the link right here. I will post this in the chat if you're not familiar with this. This is my more erudite version of what I'm talking about. And so here, I'll post the link here. There you go. Don't fall for the thud factor. Try to be a fundamentalist as much as you can. I'm not saying ignore data. I'm not saying ignore the models. I'm not saying ignore the technicals. But personally, when these other things agree with the fundamentals, that's when I'm more strongly bullish. And I try not to fall for anything that's, very impressive sounding, has lots of math or very fancy hats and robes to go with it. Got to look at the fundamentals from my view. There you go. Those are my introductory remarks. And now I'm happy to take it to questions. The first question that you may or may not see there, I'm bringing it in from outside. And this is really maybe what got me started about thinking about how I would introduce the topic today. First question I had was from somebody on the Twitter feed when we were starting to talk about this uranium stuff in the last couple of weeks, looking to heat up with the Section 232. Somebody asked how long I think the RFPs would take, the requests for proposals. And that's one of these technical questions where I could come up with a number about the RFPs, and it might sound very, impressive that I have this number for the RFPs, but it would be a guess. I think it would be bullshit. I don't think it's important for me to give you my time frame for the RFPs on Section 232, especially since we don't even know what the decision is going to be or what the report might say. Now, given the current administration's predilections, America First, all that stuff, I do think the odds favor the Department of Commerce coming out with this positive statement and this encouragement of the U.S. uranium industry. But it could be no more than that. It could just be no more than, yeah, this is important, we should care. Or it could go much farther. It could say, yes, and we recommend, imposing a 25% domestic supply requirement for U.S. Power generators. But we don't know what it's going to be. And we don't know if they make that recommendation that Trump will necessarily approve it. I think, again, given what we know about this administration, that's a reasonable supposition. But it is a supposition. It is, it's not a fact. Fortunately, we can look at this as potentially a win-win scenario. If I'm right about the fundamentals for uranium, then whether or not we get a 232 tailwind doesn't matter. If it happens, great. It adds to the upside in our speculations. If it doesn't happen, it really doesn't hurt it. The realities that I mentioned before, or the numbers that approach useful reality that I mentioned before, like the 26 new reactors online in China, that tells us something about what the trend is right now. Forget imminent and inevitable. What's happening right now is that demand is increasing. That's what's happening right now. Might change in the future, but right now, demand is increasing, and we've seen supply come offline, supply that's not easy to bring back online. So 232 might boost, and yeah, if they recommend a required 25% or more, who knows, requirement for U.S. industry to rely on domestic supply, and Trump goes for that, and the government mandates that, it would be instantly, a huge boost for uranium suppliers in the United States. And of course, people would see that coming the moment the report goes public. people will speculate. People will start to jump on that bandwagon. And that's why I've called the report a tradable event. And I'm not assuming it goes one way or the other. I'm assuming that if it goes our way, uranium, a boost for uranium bulls, it'll give us a pop. And whether you believe the bigger picture of uranium or not, you can trade on that, get in, get out, no harm, no foul if it doesn't go our way. Okay, that was the first question. I'm now quite willing to take other questions. I've talked 25 minutes already. Not tired, ready to go. Well, I'm not seeing any questions, so I'll give you a chance to type any in, points that you'd like to make. If not, I will. How did I meet Doug Casey? Okay, fair enough. I did say it doesn't have to be the 3 yellow metals. I love this story, by the way, because I think it's instructive. So in the first case, I met Doug Casey through very early days of the internet, kind of, virtual pirate radio station I was running, libertarian stuff, anarcho-capitalist stuff, and Andrea Rich, who ran Laissez-Faire Books at the time, is a dear friend of mine. A really good apple. She's no longer with us, and we all miss her. But she suggested that I interview this Doug Casey guy. I said, "Who's that?" She said, "Oh, he's an anarchist like you. He's hardcore. He's a famous investor." So I got Doug Casey on the show. It was called the Freedom City at the time, a virtual city. And I asked him questions for 45 minutes, and his answers were all basically everything I would have said. So I felt like I met my long-lost intellectual brother. This was in the early 90s. And I didn't actually meet him in person until after the September 11 attacks. And I was at some event. It might have been the next Freedom Fest. I'm not sure. It was some big conference. And Doug was up there talking about, he loves Roman coin collecting and Roman history. He draws many lessons from that to today's world. And he was up there comparing the United States to the Roman Empire. And this was not very popular because this was post 9/11 and everybody's wearing red, white, and blue and feeling very patriotic. And Doug was talking about the decline and eventual fall of the Roman Empire. So the crowd was very restive, scraping of chairs and, and he was talking about, the eventual inevitable fall of the United States as an empire. And people were very unhappy. And then somehow Doug got on to, from the Roman perspective, it making sense to feed the Christians to the lions. Now, he didn't say that was a good thing or he favored that. He just said he understood it because the Christian sect was divisive. It was subversive at the time. It was destabilizing for the empire. And so from the Roman perspective, it made sense to feed the Christians to the lions. And this was just too much. I mean, the audience was already unhappy. And this was a room with, I don't know, maybe 1,000 people in it. And I'd say fully half of them just got up, stood up, knocked their chairs over. There was this moan and the hairy eyeball and all that stuff. And all these people got up and walked out on Doug Casey. I stood in the back of the room watching this happen. And I'll never forget this. Doug stands up there. And he picks up his glass of water, shakes it around, takes a sip. He leans into the microphone and he says, "Good. I didn't think they were paying attention." And he keeps right on going. This is classic Doug Casey. Now, I hope I haven't offended any Christians out there, and I hope you understand that it wasn't his intent to offend any Christians out there. This tells us some things about Doug Casey. I went up and I introduced myself afterwards. That was the first time I met him in person. And I really understood that this is a guy who, whether you agree with him or not, he's going to say what he thinks. And there's a refreshing, honesty in someone like that who really doesn't care what anybody thinks about him or how popular his ideas are. And I think there's value in that. And I'm trying to emulate that. I don't have quite the level of drop dead money that Doug has and his level of uncaring. Frankly, I need my customers to subscribe, resubscribe, and I want to do my best for them. And hopefully that's good news for you. If you're somebody who's out there thinking about subscribing, I will tell you quite candidly, I need your business, I welcome your business, and I will work my posterior off to earn your renewed business. I'm not Doug Casey on that level, but I am trying to be, as I hope you've seen so far in this broadcast, not a purveyor of bullshit. I want to have that level of integrity where people know that if they hear me say something, that I'm going to say the truth, whatever the consequences are. So that's my how I met Doug Casey story, and that's my standard that I try to live up to now in terms of honesty, at least. All right. What do I think of Elliott wave cycles predictions? Okay, so Elliott wave theory. I don't want to offend anybody, but I also don't want to become a purveyor of bullshit. And I'm not going to say that Elliott wave is bullshit. And, you know, there may be something to this theory. It may have, you know, they see patterns that seem to repeat, and I'm not denying that. My hesitation with it, though, and any powerful technical analysis I've seen a lot of TA that, you know, you map it onto the past events, and it really seems to work. It really seems quite powerful. My problem with this is that in terms of predicting, you know, what we should do next in a relevant time frame as an investor and as a speculator, is that the guidance is not often very useful. In my experience, I have found that if I rely, oh, Elliott wave says this, or my friends at the Jelly Donut Club and their TA says that, it just often leads me astray. That's my experience, and I'm sorry, I hope I don't offend anybody, but I would be bullshitting if I said anything else. My experience with all forms of TA is that when I see it align with my fundamentalist views, then it gives me more confidence, and that helps me. I find it helpful. I find it useful. But if I'm just going based on the TA, or if the TA doesn't jive with my sense of what's going on in the real world, very suspicious. Been burned by that, and you know, don't want to risk my money going there again. Okay, next question. African uranium companies, specifically in the country of Namibia. All right, well, the good news is that Namibia has been pretty stable. They haven't gone around nationalizing people. I know of companies working there that have been unmolested for many, many years. Now, the thing about the African uranium plays from the fundamental perspective is that they're low grade. They just don't compare to the Athabasca Basin play. So if you're Cameco and I'm not discussing specific equities, I'm discussing the market here. If you're Canada's biggest, highest grade producer and you're shutting down your highest grade mines because you make more money buying uranium on the open market and selling it into your higher price long-term contracts than depleting your own asset. You know, what hope have you got if you've got one of these low-grade bulk deposits? Okay, maybe you've got lower mining costs, but you still are dealing with low grades. If you look at there is a company we all know and love operating over there that has shut down their bulk tonnage operation there because it's low grade. And if you look at the incentive costs, if you look at the numbers being used in the various PEAs, PFSs, fully bankable feasibility studies that uranium developers and explorers are releasing, they're using $50, $60 uranium. And that includes the ones that are low-cost bulk tonnage operations. You know, there's some of these that they're basically just gravel pits where you can wash the uranium off already busted up rock. And even those guys are using $50, $60 uranium price assumptions going forward. So no, I'm not very excited to get into any of these Africa plays, which not only have they got the bulk tonnage challenge ahead of them, there's also the Africa challenge. And may not be popular with my African friends for saying this. I understand that Africa is not one country. It's many different countries. Different jurisdictions have different levels of political risk. But overall, I have to say, experience has shown that political risk is higher on that continent. I don't think I'm going out on a limb saying that. And there's also physical safety issues. You know, even if the government doesn't turn predatory, there could be outlaw gangs that can come and affect your operations. And then there can be nature. There can be an Ebola attack can spread and eat your lunch. So you need to be very careful with Africa plays in general. I do think as a class, they'll probably go up when uranium is going up, you know, and when it does one of its vertical rises. I do think that will happen, and I do think that will lift all ships. But I'd rather go with the high-grade stories. I'd rather go with the low-cost producers or pre-producers, almost producers. Those will be the ones to get the joy first. So, you know, only so much money to go around. I'd rather bet on the guys that are going to get the joy first. Okay, next question. Regarding silver and gold stocks, I'm repeating these in case anybody doesn't see them on the screen. Regarding gold and silver stocks, are you focusing on the miners or the pre-production sweet spot? Okay, yes, I am focusing on the pre-production sweet spot. For those of you not familiar with that, this is the time in the famous curve of exploration, boring engineering phase, the ramp up to production. I'm well known for my research in this area. As far as I know, I'm the first one to publish numbers showing that approximately 92 to 95% of the people that start building their first mine succeed. The average gain on that change from exploration development to production is on the order of a double. Not all of them deliver positive returns for investors, though. Only about 70% do. And the gains are much less in bear markets, but they work. I'm quickly reminding everybody of these numbers because the numbers are really, really positive. It's so hard to guess which company is going to make an exploration. And honestly, even my best friends and my most qualified peers, you know, Brent Cook is my favorite competitor. It's still a guess. Nobody really knows who's going to make a discovery. That's why you buy a basket of them and you back prospect generators that put other people's money to work. It's so hard. But in the pre-production sweet spot, it's easy to see who's likely to deliver a win. And history has shown that the gains can be quite respectable. And in the best cases, they can be on the order of the gains made in a discovery. So that's my focus. The caveat to that, though, is that when I'm very bullish on a particular metal and there aren't any great pre-production sweet spot plays, I might look at a producer that has a lot of exploration potential or some kind of game changer on the horizon. Particularly in the silver space, you know, I've talked about how if you're a gold bull, you should be a raging silver bull. And trying to find really good silver plays has been difficult. And you know, I don't want to hurt anybody's feelings. And if you've got your favorite silver stock that I haven't written about, you know, it may be that it has 7 or 8 of Doug's 9 Ps that he taught me for resource evaluation. I'm just not willing to go there myself. I should mention, you know, I talked about putting my money where my mouth is. My current portfolio is 100% composed of stocks that I believe so strongly in that I'm willing to put my own money in. That limits it to a certain number of stocks. If I had a model portfolio in multiple publications the way I did in my previous work, I could write up anything that looked good to me. And I wouldn't write up just anything, it had to look good. But now the portfolio is really limited to what I'm so convinced is going to deliver that I'm willing to put my own money into it. And that has made for a much smaller portfolio. So that doesn't mean that if I haven't picked your favorite silver stock, that there's necessarily something bad or wrong with it. It just hasn't quite convinced me that that's one I want to put my own money into and lead by example on. So yes, I'm focusing on the pre-production sweet spot, have several of those in my portfolio now, I'm actively looking for more, but I will look for you know, a small producer with imminent upside if there's not enough good picks out there. Next question. Do I think there's any chance of Trump instituting a gold standard? You know, with any other president, I'd say no, not before the apocalypse. But with this one, who knows? He's certainly shown that he's willing to go places nobody else will go, and could be loony. But a more perhaps useful answer is that I'm not at all convinced that Trump gets a second chance, a second term. And I don't think this happens before that. I think things would have to get really bad before anybody would consider that, even this president. I don't think Trump's a gold bug. I don't see him just doing it on principle. I would see him or anybody doing this in response to dire threats to the dollar. And you know, even if things start falling tomorrow in the broader markets, I don't see the United States in such a dire position where that happens in Trump's first term. I think things probably start getting bad. This is arm waving. I'm not telling you the future. I don't want to provide bullshit. My gut sense, no better than that, is that things start unraveling before the end of Trump's first term, and he doesn't get a second term. And certainly the socialists who are likely to replace him, they're not going to do that. So I'm not looking for that in the near term at all. Probably some other country first. Next question. Last week, the NRC approved 20-year operating life extensions for 2 U.S. power plants. Then yesterday, Millstone, 2-gigawatt power plant in Connecticut, received a last-minute reprieve from early shutdown. New trend. Could be. We've looked at this before. I mean, it wasn't so long ago that the first new plant was permitted in the U.S. But at the same time, I don't want to bullshit anybody. Yes, it's easy to take those data points and say, hey, this is looking up. Things are looking better. But these same socialists that we're talking about, if I'm right, and others, I'm not the only one saying this. My fellow Puerto Rican, Peter Schiff, I think, agrees with me that Trump's in trouble. I think Doug Casey also is not real optimistic on a second term for Trump. And so if you get people that feel a need to align themselves with Alexandria Ocasio-Cortez, or seem more left than thou, if you will, or more green than thou, the green shoots we see now for the U.S. uranium industry could easily be mown down in 2021. So yes, positive signs, but don't put too much weight on that. Things change. These 2035 numbers that I was telling you about, so many of these models that people build and project are based on these forward-looking statements, right? Nobody really knows. Recognize a guess for what it is. It's a guess. Put your own weight on it. When these guesses align with the fundamentals, I'll put a little weight on it, but never forget that it's a guess. Or you start believing your own bullshit, and that's really when it gets bad. What sites do I recommend to go to get various metals charts? Well, I don't think this is too difficult. I use Kitco a lot. I think that's probably my #1 site. I like to look at the gold chart, not because the daily fluctuations matter that much, but because it tips me to the mood of the market today. And if I am looking to buy or sell, if I'm looking to buy, I want to look for a day when gold is falling off so that I can try to bid under market. I might see the market come to me. Or if I'm trying to buy and I'm seeing the market's going up, it's getting away from me. Well, then that tells me to sit back, be patient. So I do find that to be useful information, but it's the longer term charts I look at. Kitco has a sister site where they have lots of base metals, the main base metals, I should say, and they also update the uranium. But I'm glad you asked this. So the Kitco Base Metals website has the primary industrial metals on there. At the bottom of the column on the left there, they quote the UxC uranium price, the weekly UxC uranium price. They quote it typically on Fridays. UxC will release it on Tuesday night or Wednesday morning, depending on what time zone you're in. So it's much better to go to UxC first. And I bring this up because it's striking to me how UxC posted not a hugely lower, a 30-cent lower uranium price for last week. And the uranium stocks I'm watching, they all kept going up throughout the rest of the week. And I thought, oh, well, maybe people are too cheap to pay UxC for that data. They don't look at the freshest data they can get, and they look at Kitco on Friday. And maybe on Friday, they'll see that uranium dropped last week, and these prices will come back down. Nope, they didn't. So maybe I haven't done myself any favors talking about the Section 232 report being due on Trump's desk on April 14. I've written that that's a tradable event. Maybe that's attracted more attention to this space than I thought it would, and more people are bidding up uranium plays, even though uranium prices went down last week. Personally, it's just not the way I do things. I'm willing to miss the stock I hope to buy. I did put out an alert to Independent Speculator subscribers last week that I had a stock I wanted to buy. I notified them first, and darned if it didn't get away with me despite uranium prices dropping. But I'm not going to chase it. I'm going to wait for it to come back to me. And if it doesn't, that's okay. I've got other uranium stocks that are ticking up, and I'm quite happy to see that. Okay, next question. Oh, sorry, other sources for prices. I did mention vanadiumprice.com. It's published by an issuer, so I sort of take that with a grain of salt. But so far, they've been very good at posting the price when it goes down. Despite that, You can also, various subscription services, you can get LME data and so on. But those are the main ones. They're free for everybody to use. And so far, I have had no problem with the quality of the data. Okay, do I invest myself in prospect generators or royalty companies in the precious metals space? A favorite of Rick Rule on a 4-year time frame. So no and yes right now. Or yes and yes under the right market circumstances. The prospect generators, in my view, are hands down the best way to speculate on the early stage. If you're aiming to hit for the bleachers on a 10-bagger or better, nothing delivers that like a discovery. Well, maybe Bitcoin in 2017, but that's a one-off event. Exploration plays routinely on a yearly basis can deliver 20-baggers. And every year there's several 10-baggers based on discoveries. And it's so hard to predict, like I said, even the best in the business, the Rick Rules and the others of the world, they buy a basket of these companies. None of them would ever put all their money in their favorite exploration play, because even that one can completely fail year after year after year. The best people and the most money. The prospect generator business is hands down the best way to do that. But precious metals have remained range bound. I do think, as I said earlier, that this is a year we break out of that range. Just a guess, no BS, just a guess. But I do think this is the year we break out. But until that happens, Mr. Market really doesn't like the get rich on process story. It doesn't like prospect generators, even though they're doing great work, even though they're getting other people's money spent. And that this is how you fund discovery process without diluting the heck out of your shareholders. I just don't see that happening. So when the market is more frothy, I should say, it's not a market-friendly word, but when things are frothy, yes, that will lift the prospect generators, and you can make money on them even without the discovery. A good prospect generator that's getting results, it has other people's money going in the ground on multiple projects, those stocks can double or more just on the process. And the beauty of that is you get your original investment back off the table, you're risk-free, what we used to call at KC Research a KC-free ride. My friend Marion Katusa coined that term, but it's long-standing wisdom to recover your initial investment when you can on high-risk speculations. Then you've got the best of all worlds. You've got the same amount of money you started with in a prospect generator, which can go to the moon if they're lucky, and no risk if they're not. So I would do that. I would start building a prospect generator portfolio in a frothier market, which we may see before the end of the year, but we're not there yet. So I have 0 prospect generators in my portfolio right now, but I'm looking to buy under the right market circumstances. I do have 1 royalty pick, and if I had a lot more money, I would probably have several more that are obvious. You know which ones I'm talking about probably, but I do believe in that. And I guess I'll just go so far as to say I favor the smaller royalty plays because I just see more volatility to the upside. But it's just a great way to play the space. If you're bullish on any given metal, the stocks related will give you leverage to that metal. And the royalty stocks are largely immune to so much of the downside in the other companies. There's no exploration risk in them. There's no production risk in them, or limited production risk, because they're not miners. They get paid. Unless the miners shut down their mines, they get paid. It's a very robust business model. So yes, I do like that a lot. But I'm just limiting my own money right now to the ones that I think have the best shots of substantial gains. What do I think of uranium in Argentina and Bolivia? Well, the quick answer for Bolivia is that's a no-fly zone for me until and unless we see sustained improvement in political risk in that country. I just won't go there. I mean, it's okay for Pan American Silver, again, not making any comments about that equity, but talking about that market reality. For them, they've been in there for so long. I think it's relatively low risk for them. But anybody else that discovers something, it's very high risk. I'm reminded that actually the Bolivian government, after meeting with the Minister of Mines and him telling me we're not going to nationalize anything, I remember going there, and the guy at the time told me, no, yeah, we're social democrats or whatever, but we're not going to nationalize anything. Well, guess what? They did try to nationalize Pan American Silver's flagship mine in Bolivia. And you know what stopped it? It wasn't free market forces. It wasn't the companies, powerful lobbyists. It was actually the labor unions. The labor unions were smart enough to realize that if the government took over the mine, they'd run it into the ground. It would no longer be profitable in relatively short order, and they'd lose their jobs. So it was the labor unions that shot down that nationalization effort in Bolivia. So Bolivia, no-fly zone for me. Argentina actually has taken a significant turn for the better. But again, here we have a question of election year. Can Macri stay in, or can a Macri-like person stay in, or does it go back to the kleptocrats on the Kirchnerite side, or worse maybe? Honestly, I don't know. I would say that the overall trend in South America has actually been a shift towards better. I wouldn't say right-minded government or good government, but 10 years ago, you had these, Correas and Kirchners and Morales and Chavez, and, the whole continent seemed to be really going off the deep end on the wrong side. And now you have, if not necessarily great paragons of freedom and free enterprise, you've got more reasonable pro-business governments in most of these countries. So overall, seems to be a good thing, but that doesn't prove anything about Argentina. We have a specific event that's highly material on the horizon. I want to see who wins the election in Argentina. If they remain pro-business, that's enough time for exploration to happen, for advanced development to deliver a project, for mines under construction to deliver. It's interesting, and certainly the geology there is fantastic. So many of my mentors in the business, the great explorers, they go there and they talk about how the Deseado Massif reminds them of Nevada, and so on. So if that place can keep its act together, very bullish, I think, for Argentina place. Okay, next question. Does Section 232 issue have any bearing on whether you are focusing on U.S. versus non-U.S. deposits? Absolutely, yes. Now, it could spill over. It could have an effect on all uranium plays. It could provide a tailwind for everybody in the space. But there's no doubt in my mind that it's going to provide the most joy and the quickest to the U.S. uranium plays. And I'm probably giving away too much about my portfolio when I say this, but that's absolutely my focus right now, is on the U.S. plays. Again, it's not that other ones aren't any good or don't have upside here, but I'm only writing about the companies that I'm willing to put my own money into. So I'm really aiming for the cream of the cream, the very best plays that I can speculate in. And I'm willing to risk my own hard-earned cash in. So if you want to know what those are, please sign up. But yes, the answer to the question is focused on US first. Next question. I like that you're positive on uranium, but I know we don't see huge volume in uranium stocks. It is sad. Okay, that's not a question, but I think it's relevant. And this is one of the reasons why I have been in writing about this until this 232 thing came up on my radar is actually, no, this could be a tradable event in the near term. What I had been writing until then was that, yes, I'm very bullish on uranium this year, but we have seen really a disconnect between the uranium stocks and the uranium price, and not a broad disconnect. Between other news impacting the uranium stocks, we would see that uranium was trending up, the stocks in general were trending up. But what was happening is we'd get one of these big smackdowns on Wall Street, the Dow dropping 1,000 points in a day, and everything would sell off. The uranium stocks would sell off with everything else, even though uranium was up at the same time. So I was being cautious. Again, my job is not just to be a bull or a cheerleader. Yeah, uranium, everybody buy uranium. My job is to limit the bullshit as much as I can, tell you what I think as straight as I can. And again, that's not because I'm a saint. That's because I want to be a reliable source of information, because I think that's good for my business. So that's what I was saying. I was saying, love the uranium story. Near term, it's broken. It keeps selling off for the wrong reason. And until that changes, I'm hesitant to put more money in this. And then it came up on my radar that 232 report is due on the president's desk now in less than 1 month. And because the uranium stocks haven't like totally melted down. They are trying to do the right thing when Wall Street doesn't smack them around. I see relatively little downside in the near term. And if that 232 report is made public and it has very strong statements, I think it's good for a near-term pop. And so that's why I see that as a tradable event. It doesn't require us to be right about uranium in the longer term. It doesn't require Mr. Market to come to his senses about uranium, not being the same thing as Apple or pork bellies or whatever else is going on in the world. And that's why I've changed my tune for now. After that, and if the 232 thing disappoints, doesn't move the needle, I will go back to being cautious about uranium. I will want to see uranium stocks going up even when the broader indices are dropping on the back of higher uranium prices. When I see that, that will be the signal to me that it's time to start buying with both hands. Okay, next question. Are you familiar with Mike Schellenberger's work? Yes, actually, I have a link here to that. I was going to post it in somewhere. But if you're familiar with that, here, let me see if I can post this link. Yeah, why I changed my mind about this. I highly recommend this. I tweeted about it, actually. I tweeted 2 links on this, and I think whether you're for or against uranium, this is definitely something worth watching. This guy was an environmentalist, very hardcore, and he's still an environmentalist, and that's why he's pro-nuclear. And what's beautiful about this is that it's very hard to take away the sort of ethical high ground from him. He's not an evil capitalist like me, or he's not, a MAGA hat wearing Republican or something. He's very sympathetic to what would otherwise be the Green New Deal. But his point is that we need nuclear to make this happen. You're just not going to get there with windmill farms. So yes, I highly encourage this to everybody. If you're skeptical about uranium, you can rely on this source as being the most skeptical source of data and still bullish. So you may find this source of data to be interesting for that reason. But if you're listening to me, you're probably already neutral to positive on uranium. The value of these links might be, you can look up Schellenberger's others talks. The value might be to share with other people who disagree with you. When you talk to people about your uranium investments, or you're thinking about investing in uranium, or that crazy Lobo Tiggre guy says uranium's going up in 2019, and they say, "What? Uranium? Are you crazy?" Send them these links. They're very persuasive. I highly encourage people to spread the word there. It's wonderful stuff. Yes, the biggest. Do I think there's some change that will occur with people's perception? Not. Longer term, no. Actually, so relevant to sort of bigger picture here. I'm very bullish on uranium in 2019, maybe 2020. After that, remember what I said about 2035 being so far away. This could easily shift the other direction. And it doesn't take another Fukushima. And by the way, I do think we've learned a lot. We learned a lot from 3 Mile Island. We learned a lot from Chernobyl, which is a completely different design. We learned a lot from Fukushima. I'd say it's pretty unlikely that we're going to get another such event, certainly not the same event. Disasters do happen. But I'm not expecting another nuclear disaster anytime soon. So that's not my reason for being hesitant. I just think that, this may sound negative, but I think we've lost this fight. I think despite Schellenberger's work, I think we've lost this fight. I think the world moves increasingly away from nuclear power as fast as it can. The reason why I'm willing to be pro-nuclear or pro-uranium prices in the near term is because that takes time. You just can't do it. I mean, even Park in South Korea, he says, "Oh, we're going to go completely non-nuclear and take South Korea off." Well, guess what? They turned out to be easy to say, hard to do, and they've even approved some of the new plants that were coming up for approval because they couldn't just turn the lights off, and they couldn't get the energy any other way. And if you do believe in greenhouse gases about to bring about a mass extinction event or something, there's no way to bring those down without nuclear power on time before the models say that big trouble starts happening. So I think in the near term, we see a reluctant acceptance of nuclear as part of the necessary solution. But I think you see that as a necessary evil, and I think you see the world moving away longer term as fast as it can. The question is, how fast can that be done? The answer is, I don't know. And I think anybody who tells you how fast it can be done is probably a purveyor of bullshit you should be suspicious of. But for the near term, I feel pretty safe enough to put my own money into this space. What is my opinion on the Pilbara Novo story? Okay. Several things. One is I try to avoid discussing particular equities, particular companies, their stocks. Securities analysis is the bread and butter of my business. It's what my subscribers pay me for. And in fact, we have a feature in the letter where you can write in to ask about companies. And even if it's not a company I cover, I haven't bought, I will give my take. I'll be doing more of that going forward. So I hope you'll forgive me for protecting my business there. I encourage everybody to subscribe, of course. I told you I would. Please sign up for my take on specific equities. Now, about the Pilbara and that kind of gold, I don't know that I have any great pearls of wisdom to give you that you haven't heard somewhere else. Clearly, there's a lot of gold there. Clearly, there are technical challenges with trying to quantify it, try to really put together a robust and incredible mine plan will be difficult. You don't even know how to sample accurately, adequately. That's a big problem. But the gold is there. And maybe this is something that becomes a mom and pop business for 100 years, people taking gold out of the Pilbara on a less formal way. But if you're, as a publicly traded company, going to put out a bankable feasibility study on how you're going to make money doing this, right now, that's pretty tough. And my own personal experience, maybe other people would be willing to go there on an exciting looking PEA or something not quite fully bankable. But my own experience with exciting stories that have some good reason why it's too lengthy or too expensive to produce a bankable feasibility study. So we're going to go ahead because we know we have an exceptional case, and we're going to go ahead without that. My own experience is highly negative. I frankly got my posterior handed to me with Rubicon, one of my biggest mistakes. I bought into that story. The guy seemed to be the expert, looked me in the eye, told me it would be good. The numbers look good without a bankable feasibility study. And I had to eat crow on that one big time. Banks Island Gold, my other big failure story. There's one of my articles, I don't have the link ready for you here. These are my two biggest mistakes. If you do a search on any of our content pages, there's a little search utility there in the corner. You can search for my two biggest mistakes. You'll find this. I'm being honest here. But I think it's important not just to say I'm not infallible. I'm not telling you what will be. I'm just telling my customers what I believe, and believe so strongly that I'm willing to put my own money into. And I'm willing to fess up when I make mistakes. The point of this lesson, though, is that the worst mistakes I've made have been backing something that wasn't fully studied, didn't have a bankable feasibility study or even a pre-feasibility study, because I was persuaded that it was so good and there was a reason for making an exception for that. So applying to the Pilbara, even with the Pilbara, even if they're coming up with buckets full of nuggets, I'm going to want to see a bankable feasibility study before I really believe that something is real down there. Other than that, caveat emptor. Okay, next question. You talk about vanadium in the EV battery space, but why not lithium? Several reasons. One, the lithium is not rare. It's easily oversupplied. We've just seen that SQM got their license to vastly expand their output down there in Chile. And there was some question about this because it takes a lot of water. Water is hard to come by. You draw down the water table, that can impact other people. But they did just get that license. And when demand outstrips supply in the lithium space, there can be windows of opportunity where the price will go up, and it takes time for the supply to catch up. But there's no question that the supply will catch up. Lithium, it's number 2 on the periodic table of the elements, so right after hydrogen. This is not a rare element. And if you hear, exciting stories about this rare, super powerful energy metal, that is bullshit. It's easy to oversupply the world whenever we want, and maybe a little bit of time lag. So There are times and places where it looks like there's that time lag where I might bet on lithium, but otherwise generally no. But also the battery technology is quite different. These vanadium flow batteries, and there are other large flow batteries like this, the modules are like tractor trailers. They're huge and they're sealed and they last for decades. Lithium batteries, they produce a lot of heat. They tend to be small cells. They're more high maintenance. They don't last that long. Can't be recharged as many times. It's a very different technology. And yes, I know Tesla built a 100 megawatt battery for the Australians down there, and it's already paid itself back, I believe. So I'm not poo-pooing lithium. I'm just saying that for large scale energy, I think these big flow batteries are just a better design. And in the vanadium case, it's off the shelf. So remember what I said. I said I am bullish longer term on vanadium. But right now, prices are falling. And experience tells us that when vanadium peaks, it tends to fall off and only really find a floor somewhat above previous sustained levels. So I'm very bullish longer term, but concerned that the pain is not done in the vanadium space in the near term. And lithium, just very, very different story, very different market fundamentals and dynamics. Marin Katusa talked about uranium royalty companies. He is backing up. Is it tradable yet? Again, I don't want to get into analysis of specific equities. But I guess I'll go ahead. I can mention, no, I can't mention anything there without getting in trouble for various reasons. I'm going to pass on that one. URC is still IPO. Good. Somebody else answered that on the chat. If you want to know about that particular space, please look it up on the chat. I didn't say anything. Do you buy on OTC or do you go straight to the Canadian or Australian exchange? Okay, so this is a good topic to bring up because I was taught, as a little boy, Doug Casey and Rick Rule taught me everything they knew about speculating, brought me up in the industry. One of the things that I was cautioned about repeatedly was, avoid the pink sheets, beware of the pink sheets. Those aren't real listings. Those are market makers buying the securities in other places, reselling them in the US on the pink sheets. And there's less volume, there's higher costs, it's very high risk. You can end up with an illiquid stock that you just can't sell if things go bad. And I think to some degree, some of that is still true, but it's come a long way. And there's a lot more volume on these. And actually, I have used the pink sheets, and I have been able to get in and out of stocks with no liquidity issues, no extra trading costs. In fact, my broker, and I do have if you look in the special report section of the website, there is a special report on list of recommended brokers. And my primary full service broker is Ben Johnson. He's US based, and he has a system. His trading platform is able to trade in Canada or the US. And it automatically goes to wherever the price is best. So I've told him I want to buy this Canadian listed stock. And I've given him the price in Canadian dollars that I wanted to put my limit order to buy under. And he's usually found it cheaper on the US side. And there was one time even where the Canadian markets were closed, but the US markets were open. And we were able to take advantage of a temporary drop in prices in the US side before the markets opened and the stock went up in Canada. So, hats off to my broker for doing that. And, it's a good lesson about why it helps, if you want to be a serious player in this place, to not just rely on being an e-trader on a free platform or low-cost platform. It helps very much to have a full-service broker, particularly if you want to get into private placements, which is really how Doug made his fortune. Doug didn't make his fortune as a day trader. He made his fortune getting into private placements more than anything else. So yes, I do recommend a full-service broker. Mine happens to trade wherever he gets the best price. And frequently, that's actually been over-the-counter in the US. And I think I've also said that for, vanilla trades on companies that do have proper US listings, I use Robinhood. It is actually free. They make their money when people open margin accounts, and I never speculate on margin. So I have been trading for free on US stocks. That has worked. I've never had any problems, never had any issues. And in fact, they even take orders, pre-market orders and post-market orders. It's thin volumes, them. It's hard to get executed, but you do have that possibility. So I'm actually quite happy with Robinhood for my mainstream trades. But I do recommend a full-service broker to anybody who's even thinking about private placements or who needs that help. My broker can see things on his screens that I don't see. And he has experience as a trader that I don't have. And I'm quite happy to compare notes and to get ideas from him. Okay, so we have come to the end of current questions. I have been talking for an hour. Time flies when you're having fun. So I'll give it a minute in case somebody has one more question they want to ask. But otherwise, an hour I think is usually quite enough. And we'll call it quits from there. Okay. One more, here we go. The predicted supply-demand gap for uranium down the road in the next 15 years. How big a chance it holds true? Well, the supply gap, the shortfall in supply that I'm seeing in most reports goes away after the next couple of years, and then maybe starts up again. And that gets into what I think of as bullshit territory. It may be that South Korea gets its act together in terms of moving away from uranium as promised, particularly if the people in power now stay in power, and that could affect those trends substantially. So, I think if I get into that business of trying to make these projections 5 years out, 10 years out, that puts me into the purveyor of bullshit category, and I just don't want to go there. All I'm willing to put my own money into right now is to say, we have crunch time now. That looks like not inevitable, not just imminent. Uranium is happening now. I'm on the record saying this. That makes me bullish for now. And we have this Section 232 thing as a tradable event in the near term that I think gives us potential upside with very little downside risk. And after that, even in the short term, I want to see uranium stocks start responding as they should to uranium prices in the near term. And when that happens, when that connect happens, I think we'll see in the near term a lot of joy. After that, I'm sure you can find plenty of people who will give you a phone book size projection on the gap 5 years out, 10 years out. I'm not going there. And I think that's a good note to wrap this up on. Beware the thud factor. Don't fall for bullshit. No matter how much math you throw at a guess, it is still a guess. And believe anything else or not that I say, I hope you take that lesson away. I believe it. It's how I act. It's what I do with my own money. I welcome you all as subscribers, and I look forward to doing this again and answering whatever questions we have at that time. Thank you, and have a great rest of your weekend.